Hey guys, good evening. It's Simon with Trade and Perform Coaching. Guys, want to do a quick review of today and then a preview for tomorrow. And wow, today was a great example of why I don't like to trade the Fed. Fed days, how dangerous they can potentially be, and on top of that, they completely screw up, making it an easy job to put up the zones for the following day. So. Let's go over a couple of things. First of all, what I wanted to point out in the morning or anything else, again, I've been working more and more on momentum, trade setups within the room when they appear, right? But when you walk in the morning, here's our US Open right here at 8:30, okay? And you see this trend line coming like this, like a freight train, right? And you look to the left, right? And you see we've cleared this downtrend line, even if you extended it like this, out of the gate. We've already cleared that downtrend line. We have an uptrend line working on multiple days on upper time frames. I'm just not interested in shorting that out of the gate, right? I'd like to get underneath all of this. I'd like to, well, I'm sorry, I got distracted. I'd like to get a swing. I'd like to, when I see something like this, I want to get underneath this to short, right? I want to get over this. My target was 23.80. We obviously didn't get there. Fed kind of interfered, but everything else kind of went textbook, right? Not shorting the open. Trying to get long was fine. We took the 50-60 back. We took the backside test of the 23.65 double top that you can see we had back over here. I can show you that here real quick. Right? And so there's a couple of things. When you break out from a double top, okay, we'll color that red. When you break out from a double top, here we can lower this because I'm not even going to bother with explaining how I use my modified indicator. When you break out from a double top, you expect a backside test and a continuation. First sign that there was, you could tell this was important because, okay, so before I don't want to get agitated, I just want to explain it calmly. When you get a backside test and you get responsive buyers, you expect it to continue up. You don't want to see a new lower low. So this goes to reading price action. The first time you see a bar close below here, look how big that bar is. That's not like a little tiny bar. That's not like we'll just kind of test underneath like here and see if it holds. That's a get the hell out of the way bar. We're going lower. This is freaking, I want out right now. This should have never ever happened. This bar closes. You now automatically should be thinking, we've broken the last swing low. What am I looking for? Looking for a 50-60 retrace for a potential short would be what I'd like to have, preferably underneath 23.6677. Next, notice that we blast right through the top of the uptrend line. I mean, things are, there is nobody or nothing stopping this market from rolling lower at this point. This is a OTF. Get me out of the way, and the only thing to say about it is it's exactly why I do not trade the Fed. I don't recommend that others trade the Fed. It's very, very difficult, and it was pretty much a freight train down. There's no counter on any time frame that you switch to in this chart, even if we drop this down to a 5-minute time frame, which will take a couple minutes to show up. There we go. It's quick. Luckily, TradeStation's working fast tonight. You can still see how they tried to hold. So be clear. Look, this is the backside of the double test. See how they couldn't close below? They closed below. They try to get it above. They close below. It's over. And look, all of a sudden, at the lack of the counter rotations on the bars, right? Like, this is just heinous. The only place we get big counter rotation is in the last half hour. They try to save it, but we're never able to break it back above a swing high. And so, as you know, usually a 20-minute extended moving average in ES is is not very useful. However, that being said, when you see it stuck underneath the 20 period, just like this morning when we came in and we couldn't get below the 20 period, right? You know it's on a freight train. Wait till it finishes. Even if you wanted to short it over here, right? It got below, it came back up, and then it gives you the waterfall of death pattern, as I like to call it, to the downside, right? This is lower lows, lower highs. They're trying to hold the volume point of control, and it is all over from there, folks. Next. The next thing I'm looking for is even if I were taking the trade, right? I'm going to go to my chart for today, which is right here, right? And a couple of things that I wrote. So first of all, I put double top, potential breakout area that I wanted the backside test. We got that. So what's the notice that when we got the backside test, we get the tick divergence right into the backside test. So look on this break into this quote key area, okay? So look closely. I'm going to spread this out. And I've moved my zones around just a little bit unintentionally, but I'm not going to fix them since it's late. I want to get to bed. I just want to make sure I get this out here. Okay, look. This is the zone we're in, right? See this? Here's where we hit our, let me draw the line. Bam, we're into the zone, right? So you might say, oh, well, there's a little tick divergence, right? And we're coming down. But see how there's no clear tick divergence as we're coming in? Earlier, so just so you can see what it looked like earlier, when we came into tick divergence earlier in the day, you can see clearly, right? We're making new lows. We're really extending down. And you can see that the wicks are actually, we're wicking off the bottom, right? And we are actually, right, I'll express that out. This is where we made the low up here. This is where the ticks are coming in down here. Clearly, we're having tick divergence at a key area, right? Here, all the momentum's to the downside. We're coming into this zone, right? And as we come into the zone, notice, here's the low. Next bar, lower. Next bar, lower, right? We're already at the back of the zone, and we've already spent 15 minutes in. Next bar, flat. This isn't tick divergence. Tick divergence, you need a new low, right? And then finally, on this bar right here, after spending 5, 10, 15, 20 minutes, inability for one bar to close on top of another bar, right? You finally would have the smallest of tick divergence on this bar. And that's pretty cool, right? If you took the close of that bar, your stop's right behind, you gave up a couple of ticks and that was it. Look at what time of the day you're in, last hour, right? You already know you're in an OTF, and you also know when we came into the prior zone, right? Look when it came into that 65 to 63 area, and we are now below. Globex high. We've just trapped into Globex high, right? Look when we come in. We know that when we came in below Globex high, we hit a new low tick, right? And we never get tick divergence on a new low, so you know you're already trapped. In other words, everything's against you here, right? Why are you trying to fish this, right? There's no reason. Then you can see they finally give tick divergence into the close here, but that was, if you're trading 1500 to 1510, good luck. I can't help you anyways, right? So anyways, that's my 2 cents. You can see that once we broke Globex high, we already broke Globex low. Down here, there was really no point. You were looking for a backside test. And like I said, you were stuck underneath the 20-period moving average. Everything was showing you that momentum was to the downside, right? And you failed, lastly, right? I want to go back to this other chart that I had here. The other thing that we're looking for when this is all pushing down. So here's my original trend line. Let me erase all this stuff and just look at what's going on here from a trend line perspective, right? First trend line, right, up. Next trend line, up. Okay, notice there's nowhere in here where I can fantasize about having an uptrend in any of this, right? See this? We have started down, 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 okay? And then maybe you say, hey, well, the trend line's broken, but Where's your any kind of uptrend where you're breaking a swing high and looking for a retrace, right? So what normally happens to people here is they get caught in just this sheep and headlight. So I know I'm being a little intense, I'm tired. You get caught in a sheep and headlight deal. Give the market time to turn. It does turn, it does give you opportunities, just like this morning when we were running straight up, right? You didn't have to chase any of this unless you were using the momentum setups that we've been introducing, right? You didn't have to chase this, you could have waited. We got this location, we pretty much nailed this location perfectly for a long side trade. This had a potential of anywhere from 3 to 7 points, however long you're able to hold it, and you were able to avoid this downside move, right? So now comes the question, what are we looking at for tomorrow? And that brings up a few problems, okay? So let's get the key critical areas in our notes. I've got my notepad here, and hopefully I've got my pen nearby. Where did I put my lovely pen? Here we go. So the first thing I'm going to write, I always get excited with days like tomorrow because I think, oh, the following day is going to be huge. Let me get to my trading journal, to my trade plan for tomorrow. First thing I'm going to write down. The open is likely to be volatile. And then the next thing I want to ask is, do we open drive, up or down, trading above or below today's low? Now the next is important, right? So I want to jump over to this here real quick on a blank screen. We're going to get rid of this. Okay, and remember, in order for markets to go down, we need some key things to occur. Okay, so let's just put this on a 15-minute chart. Notice, as bad as today was, what didn't we do? We didn't get below our swing low at 23.40, although we have just traded underneath it this evening to 37, right? And we have not broken our last swing low down here at 22.18, right? So we are looking at swing lows at 23.40 and 23.18, critical areas, right? So the other thing that I want to point out is that, so the next question I would naturally have is, well, what happens when that occurs? And we have a good model to go back and look at, right? So I'm going to do just that. Notice, see how we had a nasty down day here, right? See how it failed? So look what I'm pointing out. Nasty down day. I'm super bearish, right? I know it bounced into the day, but we're going to zero. Well, I got to get below this first, right? I'm going to come back over, and I'm going to say I had a super ugly, nasty down day. That down day, right? I'm going to remove this because I'm giving you prior examples so you know what to look for tomorrow, right? So notice, this is my close right here, right? Everyone, this is just a couple days ago, is suiting up on the bear suit, right? Everyone's been on the bear suit, right? And I'm looking. So the first thing I'm asking my question is, am I trading above or below prior day's low? Notice what happens when I get above prior day's low, right here. Look at the short squeeze that happens. So that's right here, right? First thing, here's the prior day's low, right? We open up, we try to hold it, we get below, we backside test, we close above, right? We're now trapped back into prior day's low, right? And notice, even though the market didn't have a pretty phenomenal day, you got bone crushed from 38 to 48, 10 points of rotation, right? Who wants that? So the first thing I know is if I break below today's low and I trap back in, I want to be aware. I probably can get, run up pretty good. Next, if I go back and look to the left from this date, and this is a 15-minute chart, right? I'm going to look back, and I'm going to see where my last swing low was, because I can't be bearish unless I get below my last swing lows. This is the point, this is the swing low from where I launched before. That's sitting right here. See this? From here to here roughly, right? Now let's go back and look at our day. So, I go back and look at my day. Over here, I'm uber bearish. Let's get back over here. I had a terrible day. We closed at the low. And look what happens. Everyone got uber bearish, and they forgot that we hadn't broken the swing lows. And they come into that 33.35, and they proceeded to get trashed because we never closed back below those. We retested those swing lows. So, what would that look like here? Well, let's go back to today, right? Sometimes you can just logic it through, right? The first thing I want to see is I'm going to go, hey, can we get below in the morning? Am I in the right place? We are. In the morning, can I get below and hold below 42 to 39? If I don't get below and hold below 42 to 39, nothing bad happens, right? What happens? Everyone gets bearish. They get trapped. We close in the low of the day. And there's a ton of poorly auctioned area back above, right? At least I would say right back to somewhere in this structure right over here, that 52 to 55 area, right? And we haven't even started to look at volume profile yet. What I'm trying to set you up for is you got to get below that 39 to 42. Now, if we're below that 39 to 42, let's say we fall 20, I expect this to be resistance. But as soon as we trap back above, right, I'm going to look to see if we're trending up, making higher lows, higher highs. This stuff, right, the market shows a history. It likes to re-auction poorly auctioned areas. I don't want to get bearish, right? What are we going to use to do that? We're going to look for tick divergence, 10-point rotations. We're going to look for swing lows to get broken. We're going to see if we are holding below the 20-period exponential moving average. Not because we're using a trade off of it. I just wanted to get on the other side of that 20-period EMA so I can see it pop, give me a potential of looking for areas to pop back up. Next question that I'm looking at. It does get tricky if I get behind here, right? But my next support area comes in at this 33 to 31. We had, so I'm counting them, 1, 2, and then backside test, I'm going to call that 3. That's in that 33.73 area, right? Why is that important? We closed at 46. If I get to 33, that's going to be approximately 13 to 15 points down, right? The average range has been 7 to 15 points, right? 33 area becomes important. And again, unless we're trading below that in the morning, I would expect a response there first time in. Again, not even going to volume profile. Now, if we get below 33, okay, I have concerns because it's pretty much all below this 33 to 31. It's all pretty much poorly auctioned, right? And if you remember that night where we swept through, if you look on a 24-hour, we swept through all of this straight into 18. There used to be a naked volume point of control, I think, at 1975, and it swept through. Obviously, someone's going to try to hold this point down here. If we get below here, there's an open gap and a pretty good HVN sitting here between 10 and 12, right? But it's unlikely that we get there, right? Again, I have my favorite fan, this guy on StockTwits, who points out, he goes, I'm expecting another swoosh down in a 40-point range, but that same moron expected a 40 push down before we made a 40 push point up. So I don't think he knows what the hell he's talking about, right? Markets move two ways, right? So the market, the bottom line is, first test, 42 to 39. Next test, 32. Next area, 18 to 20. Finally, this 10 to 12. It's unlikely that we can get that much of a move unless we have a dramatic expansion in range. So, next question. If you open up tomorrow and you see the first hour's range is 20 points in the first hour, you know what I would do? Absolutely nothing, right? I'm going to wait till that settles the hell down because I can't control my P&L very well in that range, okay? I'm going to wait it out, right? My job, I want to be very specific as to what my job is. My job is to find, I'm my own client, I want to find very high odds, long locations, primarily long. I'm all right with shorts too, but primarily long at the top third of the range, right? And I want to get things like tick divergence, right, under controlled environments, meaning the market's not completely out of control and just whipping. I want to look for divergence between NQ and ES because NQ has been very strong. So I'm going to write that down in my trade plan. Look for divergence between ES and NQ. What I'd like to see specifically is I'd like to see ES hit a new low and NQ not hit a new low. If I can get tick divergence at the same time, even better, right? And then lastly, if we're making new lows, just like in here, what would I like to see first? Even if I don't get a retrace for an entry, I'd like to see us break above the last swing low and then look for a retrace with a stop at the low of the day to try to capture a pop to the upside. So trend line breaks, 20 period EMA just for safety. There's no trade off of it per se, right? I want to see tick divergence between NQ and ES, and I don't want to be in an overly big rush to trade this. I want to see if this was legit or not legit, right? And I want to bring up the reason why here when I jump over to the volume profile, which is right over here. And first of all, so I'm going to finish up with this, right? So when you look at this profile, the only thing that stands out to me is this 68 to 73 HVN. That's the only thing I can look at and go, hey, that's really going to help us out. When I look below, okay, when I look below, I see nothing. So I'm going to need the overnight HVN to kind of help me out, get direction. But when I look underneath this point, right, underneath this point, I'm looking for HVNs that are really, 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 really standing out, right? So here's my swing low. Notice I've got absolutely nothing underneath here. We blasted through the only HVN. So I'm going to assume that should have been resistance. I'm going to assume that becomes my key area, that 52 to 55. Now becomes my resistance. It should have been support. We blasted right through it, right? Next, I'm going to look underneath my last swing low. When I look underneath my last swing low, the open gap without HVN at 11 to 08, and then 03 to 99 stands out. All of this is poorly auctioned, and then finally 87, I don't think we get down there, right? That's from a date time perspective. So maybe I'm hoping that the 24-hour would help me, right? Because there's nothing that I look at underneath other than understanding where we've responded from before, right? In other words, when I look at the volume profile, I want to look at a place and go, this is my location. This is where I think we're going to reverse, and I'll show you here in a second on ES what I mean. So remember today when I said my key resistance was 73 to 75. See how that stands out? There's nothing in the world holding that back, right? Just like I would have said this 59 area before was my resistance. Well, now look underneath. The only thing I have is kind of this big hunk of volume sitting here that will hopefully slow the market down, but it doesn't always slow it down. See how we have a big hunk of volume here but no defined, and we trade right through it. See that? There's no immediate stopping point. We have a big hunk of volume here. See how this was defined actually a little bit better than this was? It actually stopped the market, right? So when I look at that and I go to my swing low, I've really got nothing over here that stands out. Now, I'm not a volume profile expert. I'm an expert at finding good places to get trades, right? So when I come back and look at all that, Now I got to go back to the left. What stands out to me is 2312, right? This is off the 24-hour. 2312 stands out, and then even the open gap just looks kind of okay, right? I'd really rather have it stop at 2312, and then 04 to 02 is the other area that I really like to stand out, but I don't think it'll get there, right? So at any rate, long story short, that 36.38 was important tonight. We dipped right below. We've trapped back above 40. We'll see how it does. I'm looking for the intra-day HVN, how that builds before we get into the open, right? And just like this morning when I knew we were trading above this 35.60, I knew we had a good, there was nothing, see how there's nothing in the way, standing in the way of this thing moving if it gets energy. And so we're going to have to let the market dictate to us where the key trading areas are. But what I'd like to see it do is trade back to 52, 54 and give me an up. If I got up there, I would actually consider an opportunity to take a short side trade, although I'm not crazy about shorts, but we are starting to make lower lows and lower highs, and this is starting to look like a head fake, and that the primary downtrend is still intact, which would be this right here. That still seems to be kind of sort of intact and working to the downside. So let's go over that one more time. Number one, I'm hunting for my best trading opportunity. If I see range expansion in the first hour to the downside, right, I want to be cautious. I don't want to be a hero and catch, right? I know where my swing lows are because I've written them down. I have swing lows at 23.40, 23.18, and then also the 23.33 to 23.30 area has been multiple times, right? And I'm going to show you that again on the day profile, right? This area right in here. Let's see what that actually adds up to here. There we go. 31, let's call it 31 to 33, roughly 35, 31, right in that neighborhood. We've had multiple responses from that area, and I would also consider that, A, if we get underneath, potential resistance area, but you can see how we tried to break that last time and trapped right above and shot back in. So that area becomes important as well. Below this area, that whole 30 to 20 area, I'm going to need some help. I'm going to want to see some tick divergence. I might even want to see, go ahead and let them make the low, break the swing low, give me a retrace, and but I definitely want tick below 35 to 33. I want tick divergence. I imagine first time into 18, we're going to get a response, but let the pace of the market kind of dictate, and we'll have a pretty good idea in the morning as to whether this was a BS sell-off, one moment wonder, and we're going to do V-shapes. V-shapes happen, by the way. The last thing I want to leave off here, and we're almost done with the 30 minutes, so let me get over to this because I went through and highlighted it. There we go. Okay, so I went back and looked at the last couple times. We had hard down moves where we closed on the lows. Again, if you'll look, back on March 21st, we closed right at the low. If you'll see the following day, this was the low of the day. We backside tested that low, attempted to hold. This is off of 15 minutes, right? We break, we close decisively below. You see the inventory supply bars where people try to push down. We get behind the inventory supply bars, close, right? We close back into the range. All these sellers are trapped. We pop for 12 points. We backside test, and then we balance the rest of the day. And then the following day we come back up. And you'll notice this is where we're no longer poorly auctioned here to the left. You'll see where we had the last attempt to push up and was rejected. And that becomes resistance. And we come back yet again to that then we came back to the 38, which was that day's low, and it provided support. If these guys get trapped like this, I'll be looking for this pattern tomorrow, right? If I go a little bit further back, and again, remember this pattern changes based on where we are in the cycle, right? And again, we're still in the top third of the range. Again, you can see here, we closed on the low of the day. We ended up with a trend day down. And this day ended up changing the nature of the market, right? What we ended up doing, you'll see, is we were kind of one-timing to the upside, and we kept pushing. And then this day we opened down, drove lower, consolidated, and then closed at the low, right? But even notice in that pattern, right? So if we spread that out, again, on a 15-minute point of view, this is the low of the day right here, where we get responsive. You can see we got responsive buyers here. Right here. Notice we break below. You should have this pattern memorized, right? Break below. Test. This got tested over hours, right? We closed back in. We break above what I would consider the swing high at this point, or the resistance point of that 2374. We poke our little head right above, right here, right? See this? Right? We come back in, we break the swing high one more time, we retrace, and then we force the shorts all the way back up. So, the key to tomorrow as to being able to determine whether we are going to trend day down, because I'm not going to go any later, it's 11:39, I want to go home and get some sleep. The key to tomorrow in my trade plan is, do we get below yesterday's low, and do we have an ability to get back above, forget those other support areas, get back above yesterday's low and trap back in. If we trap back in after spending a sustained amount of time below yesterday's low, I'm looking for longs, okay, and I'm looking for a V-shape back up. If we hold below and we show an inability to get back above, I'm going to be very cautious looking for my longs. They're really going to have to set up perfectly, right, until such time that the volume profile has time to come back and rebuild something that looks like I can accurately predict where I will find responsive buyers. And sometimes that means I just have to wait a day or two to let the chart and the structure rebuild itself, right? So the market will go on operating the way it does. So remember, two things. First of all, past performance is not indicative of future performance. We had a good day. Congratulations to everybody. I didn't hear from many people who traded in the afternoon. From those who I did hear trade, if you try to contra trade it, you had a really hard time. Number two, I'm trying to get my business done before 1 o'clock in the afternoon, meaning really I don't want to put on any new positions after 1 o'clock. Number three, if I don't open up below or get below yesterday's low, I'm certainly not looking to be bearish unless we get an extension up into that 53, 55 area, right? Trading futures is risky. You can lose a shitload of money. I cannot state it any clearer than that. Make sure you know what you are doing before you take a trade. Make sure you know the difference between being a momentum trader and a contra trader. Make sure you have a written trade plan, right? Both for your emotional state and for your actual plan of action, and that you have a checklist. You're following off what you're doing. My name is Simon. I'm with Trade and Perform Coaching. Have a good night, guys. We'll see you tomorrow.